You've been watching decentralized finance for a while now. Seen some people make a fortune, others lose everything. You want to get involved now, but the complexity is insane. The risk, unbearable. Let's face it, you have no time to specialize in decentralized apps, and no money to lose either. Well, there is an easy way to earn returns from DeFi. A solution with no trading involved, no hassle. A place where you're always in control. Just deposit funds and watch your savings grow. We're talking about an app. We're talking about the Yield app. DeFi banking in your pocket.
Hi everyone, and welcome to another episode of Fridays with Yield app. Today is a very special episode. I am joined by Nicholas Contasti from IntoTheBlock.com, who is going to be talking to us all about on-chain analytics, how that's evolved, also giving us a live demo and revealing some extra special rewards for Yield app users. Hi Nicholas, thanks for joining us today.
Hi Rebecca, yeah, nice to be here. Pleasure being here.
Yeah. So first of all, can you tell us a little bit about IntoTheBlock.com and yourself as well, how you got involved with it and why it excites you?
Yeah, of course. So I got involved in crypto back in 2018 after the whole frenzy and the massive crash as well. But of course, I was completely attracted about the space. So when I got the opportunity of joining IntoTheBlock, I jumped straight on it. And to put it in a few words, IntoTheBlock is a crypto intelligence platform. We specialize on applying machine learning to blockchain datasets. And then we built a platform with a bunch of other layers of data. So right now we're doing more than just on-chain data, but that's how we started. So it's still a pretty strong part of our platform.
Okay, so what does a crypto intelligence platform do? You know, that's a lot of words. Tell me, what does it mean?
Well, it has to do a lot of things, right? So it has to give out a lot of useful tools for investors. And that's what we set out to build. So as I said before, starting from the on-chain perspective, we started building an infrastructure, running nodes on the major blockchains. And that meant, storing tons of data, running the analysis, normalizing the data so that you can compare one blockchain to another, and then just adding more features to the platform. So if you go to IntoTheBlock.com today, you'll find more than 300 indicators divided into multiple sections. That means blockchain data sets, price predictions, directional price predictions. You have a DeFi insights part, social analytics, and then another section that compares Bitcoin and Ethereum to traditional financial instruments.
And why do people come to IntoTheBlock.com? What is it that your average user is looking for with you guys?
It's a very good platform for individual investors and also for sophisticated traders. What we do really good is cover, we cover most of the market. So it's really hard to get, it's essentially not as hard to cover price and volume data.
Right, that's everywhere. That kind of stuff's everywhere, right?
Exactly.
So whatever, it's everywhere.
Yeah, and we work with a lot of partners that do that, and we take data from them as well. But we go, a lot of step forward, we go deeper than that. So to host nodes on the major blockchains and cover around 1,000 different assets, it's quite a substantial work, basically. So that's what we do. It differentiates us from the competition as well.
Okay. And what about you? How did you get into, tell us about who you are. How did you get into crypto? Why do you work there? What is it that excites you about it?
Well, I'm leading the business development team. I come from Venezuela, where crypto is very popular and useful because we have, not many people know, but we have a hyperinflation. So of course I already knew about crypto before working in here. And I always wanted to get involved into financial services. So, when I had the opportunity of being part of a startup as well, and work with brilliant people like our founders, for example, I couldn't say no to that.
Right. Yeah, Venezuela is such an interesting test case for crypto, because it's one of the few places in the world where so many like retailers and service providers actually accept crypto as payment. So I imagine that's a very exciting place to kind of get involved in cryptocurrency.
Yeah, well, we used to work, we work closely with the Dash team, and that's one example. They have tens of thousands of businesses accepting Dash, and Dash is, digital cash. So it's very good for like very small transactions. So the country has seen a massive adoption of crypto in that way, and also people use it to hedge against inflation.
And so do you believe, we're taking a bit of a segue now, you'll have to forgive me, do you believe in cryptocurrency as a currency or as a digital asset?
As both. I mean, you don't have to categorize it as only one thing, right? That's why we have thousands of crypto assets. And some of them will do one thing very good. Others will do other things really good. People use, I don't know, Bitcoin as a store of value, as digital gold. And then you have other type of assets that will be more useful for smaller transactions, and so on.
And so users are into the block. So they're typically coming to you to find kind of smarter strategies to invest, I would imagine, typically in cryptocurrencies. So your users are seeing it as a digital asset and how they can make money with it, right?
Correct. But not only that, I mean, the analysis can go very deep. So there's certain things that are intrinsic from each crypto asset that many people don't know, right? So if you go to Untitled Chapter, you'll be able to find out many things about Bitcoin, Ethereum, and more than 1,000 different assets. For example, how well investors are doing, right? So we have an analysis that it's called the Internet of the Money, for example, which I'd like to show it to you later, in which we do a cost-based analysis on the whole blockchain. And we're able to compare the cost basis of all addresses against the current price. So essentially, we can see how many people or addresses are in the money, at the money, or out of the money. We look into concentration indicators that give us, how exposed you could be to whales. We look into for how long addresses are holding an asset, correlation with Bitcoin and other assets as well. Social analytics, if the sentiment on Twitter and on Telegram, and how is that moving along with price action. You can look into derivatives data, perpetual contracts, and contracts with settlement data. And you can look into contango backwardation. I mean, the analysis can go as deep as you want. It's like a rabbit hole once you go into it. But it's been really fun.
And you said there's more than 300 different data points or analysis that your users can use, right?
Yeah, correct.
Huge. The social media part's so interesting because, often we talk about the difference between technical analysis and then kind of macro and then the social media element, the sort of stuff that you can't gauge on a chart. So that's really interesting that you guys are kind of bringing that in as well, because it makes such a difference in crypto. I mean, Elon Musk only has to send a tweet, it makes such a difference, right?
Yeah, and we actually use a lot of machine learning to try to understand the connotations of tweets and messages that are being sent on Telegram that can relate to crypto. But it's a super, super difficult problem to solve, right? Like you have to account for sarcasm, and even emojis can mean one thing or another. But certainly our models don't take into account Elon Musk in his comments.
Gosh, yeah. How do you take into account sarcasm in, in a technical analysis tool? That's great.
It's quite hard. But yeah, there's some models that can, especially using tools like GPT-3, the whole space of machine learning and artificial intelligence related to language. There's some really interesting things that you can do. And we're trying to apply those models into our platform and to the data that we have so that we can, provide actionable intelligence for our investors.
It's so interesting. Well, listen, I would love to get a little bit of a live demo. Could you give us a bit of a run through?
Yeah, for sure. Yeah, I have it ready here. All right, so let me share my screen for a moment. So I have to click in here.
Right.
And here we go.
Let me just let you share your screen. Here we go. Right. Give us a run through, please, Nick. What does it all look like?
Okay, perfect. So essentially, this is the home screen of the platform. If you go to our website, this is how it's going to look. And you have to click on Launch App to get to the actual platform. The reason I'm showing you this is because it describes very easily the four main sections of the platform. Essentially, on the left side of the screen, you'll see that it says Blockchain Analytics. So we refer to that as the on-chain data that we have for every single asset. As I said before, we cover more than 500, so close to 1,000 different assets of the major blockchains. Then we have a section of directional price predictions, DeFi insights, so dedicated insights for the DeFi space. It doesn't have to relate to the token itself, but we look into the total value lock of many protocols, lending protocols, borrowing protocols, borrowing and lending rates, pairs on SushiSwap, Uniswap, and so on. AMM protocols as well. And then our users were asking a bunch of questions about relating Bitcoin and Ethereum, the two main crypto assets, with traditional financial markets. So there's a full section on Untitled that also does that. So you can look into the price performance of Bitcoin and Ethereum and compare that against, stocks like Tesla, for example.
Oh, interesting. How do you correlate between crypto and stocks?
Well, you have to go into it to look at it, but I'll just take you through it because you make
jumping ahead. I'm sorry. I'm just so enthusiastic.
No, that's completely fine. We can look into it. So in this section, you'll be able to compare those two. You have to click on stocks, so it will filter what you're comparing against, and then you've got tech stocks, crypto-related, finance, and energy. And in this chart, you can basically see the price performance of the assets against one another. You see. So in this case, you can do a full analysis, essentially. And if you scroll below, you'll find other tools that are quite important. So a correlation matrix. People used to say that Tesla was correlated to Bitcoin because Elon Musk was saying some comments and so on. And at that time, we actually posted on our Twitter that it was not correlated at all. Like you could see the data; it's there.
Interesting. Okay.
But in here, you can see the historical correlation against these assets, the Sortino ratio, Sharpe ratio, and you can also find the descriptions of those indicators directly there so that people can understand them. If you scroll below, you'll find volatility and then, the average intraday move of these assets.
And the average intraday move, for anyone that doesn't know, essentially is, the percentage by which something goes up or down every day, right?
Correct.
Okay.
That's on the capital markets insights part. Going back into the homepage, you'll find at the very top what we have summarized versions of our directional price predictions. If you want to know more about that section, just click on predictions, and you'll find these models here. They're also summarized here. And the way these models work is, unfortunately, they're not like the Bitcoin model isn't performing very good right now, unfortunately.
Well, it's a bit up and down.
But this is how it works because we're using machine learning. So the models have to learn, from past experience so that they can perform better in the future. So I don't know, let's look into one of these. So for example, the Litecoin model, which has a very good accuracy. As you can see on the current hour, so this will adapt to your time zone as well. So on my time, it's between 2 p.m. and 3 p.m. So these are, as I said before, directional price prediction. They look into 1 hour into the future, and they're looking for different price variations, right? So this model, as you can see on the very top, is looking for 20 basis points variation,
right?
Either up or down by at least 20 basis points. And so between 2 and 3 p.m., unfortunately, the model didn't build enough confidence so that it can give a prediction. But in 44 minutes, or roughly 45 minutes, it's going to try to give a new prediction. Hopefully it will. And so
how does it become confident enough, though? What's the difference between being unconfident and confident to give a prediction?
So there's a certain threshold, basically. So it has to meet a threshold of confidence. So essentially, the model is trying to assess whether the price is going to go up or down. But when it doesn't know, we rather not to give out a prediction.
Okay.
That's how it works, right? So there's two main data points in here. One is the availability of the model, and one is the accuracy, right? So availability is every time there is a prediction, and then the accuracy relates to, you know, how often the prediction was correct. So unfortunately, I mean, this model has an availability of 63%, so it's available 60% of the time. But when it does give out a prediction, it's correct 88% of the time. So that's actually not bad at all, you know.
So people can use the platform genuinely to come in and see price predictions for their favorite coins and tokens.
Yes, correct. Of course, you know, there's a disclaimer on the page, like we don't provide financial advice. This was born out of a conversation with one of our partners. So we're also working with funds to improve and create trading strategies. And we were using these models to, you know, as a signal for one of those models. So this is how we productize it for our retail audience. But, you know, we believe there is more to just, you know, there's more to just one prediction for you to have an investment thesis. So, you know, take this as a confirmation of your thesis. So if you think the price of the asset is going to go up or down, just come here and look at it, and it might reaffirm that thought, you know?
Right. I was really interested earlier on in the kind of into the money, out of the money, you know, and first of all, before you show us that, please explain what that means for people that might not know, including myself.
So I think it's better for me to explain it with the chart itself, right? So I'm just going to go straight to it. So essentially, this is that indicator. We call it there's two of them, right? So one of them is the global in and out of the money, which looks into the complete history of Bitcoin. And we're only taking into account those addresses that hold Bitcoin today. But I have to say, this is available for every asset. So essentially, we have all the charts, and then you can choose, you know, which asset to look at. So essentially, this is available for close to 1,000 different assets. So we take into account those addresses that are holding Bitcoin today, and we do a cost-based analysis in those addresses. So essentially, every time that address acquired Bitcoin, at what price it was acquired. So when we get to that cost basis of that address, right, we use machine learning to group these addresses into the 10 most significant group. And that's what you're seeing here. You're seeing the population of addresses that are holding Bitcoin at different price levels. So on the x-axis of the chart, you have price ranges, right? So for example, this little cluster here, as you can see, it says minimum price of $43,491. And then there's a maximum price of $43,698. So roughly 43,700. So you have a population of 121,000 addresses with 64,000 Bitcoins that are sitting at that cost average position.
So that's the average that they bought into the asset between those two price ranges, right?
Correct. And so if the price of the asset is higher than that cost basis, if they were to sell those assets, they would be in a profit. That's, you know, we borrowed the term from options trading. So we call that in the money. So the more to the left that you are on the chart, the more profitable you'll be. So essentially, you've bought Bitcoin, you know, at a more cheaper level.
Okay. And so how is this significant? How can an investor look at this and be like, okay, so I should do something?
Right. So first of all, nobody wants to go into an investment where most of the people are losing money, right? So this number here that you're seeing here, so 87% of addresses in the money, it's super significant. So it means the investors in Bitcoin are doing very well, right? That's one thing. The other thing is that you can look into the size of those clusters to see not only how many addresses there are in each of those price ranges, but how many assets they have into those clusters as well. So if you click on the volume perspective, you can see that it changes a little bit. So we're now looking into the assets that those addresses hold. And essentially, from the technical analysis, support and resistance bands, this is another form of looking into support and resistance bands, but backed by data, not only by, a line chart bouncing from some level. We're not saying that technical analysis doesn't work. We're just saying, there's other ways and other types of analytics that can give you a lot of insights. So for example, if you see here, there's, quite strong support between 43,700 and 46,300. But then there's not much support between these other, this other range here. So as I mentioned at the beginning, there were two of these indicators. So the other one, we call it the in and out of the money around price. So we're not very good with names. But what we do is just zoom in into the current price action, right? So from the one above, you see the complete history. So you see people that has, Bitcoin at $400, for example. But we want to know if, what's the significance of those addresses that are holding Bitcoin very close to the price action. So we did a zoom in version, which we call it the IO map, or in and out of the money around price. And we zoom in. And so from this analysis, you can actually see buying and selling walls. So essentially where there is support and where there is resistance.
Can you say that again? Binance selling?
No, buying and selling walls.
Oh, right, buying and selling. Okay.
Sorry, part of my English.
No, that's fine. That's fine.
So essentially we lock the actual the current price of the asset at the middle, and then you have 15% of the price variation to both sides. So essentially, this is very fair to say. So there's a strong support between 44,917 and 46,300. Mm-hmm. And then there's less resistance in this cluster, and again even less in here. But then you have quite strong resistance between 49,000 and 50,000. So right. It just gives you a better idea of where are those walls and how likely are those walls going to be broken.
Okay. So, I mean, you made a distinction there between technical analysis and this kind of analysis, because, some people might lump technical analysis together with this kind of thing. Can you tell us why this isn't technical analysis?
Well, it's not. It's just a different view. It's just a different perspective. So we call our all suite of indicators, we call it the crypto asset fundamental analysis. So, there's not a fundamental analysis per se. So we think we have a good model for looking at fundamentals. So if going back to the whole indicators suite, we have this quick view visualization, which we built to give a broad perspective of an asset, and it summarizes some of the top indicators in our platform. So for example, this little box is talking about the profitability of those addresses. So this is essentially the in and out of the money. So I'm going to zoom in so that you guys can see it a bit better. Yeah. Here we go. So this box talks about profitability of addresses. You see 87% of addresses in the money. So the same information that I was showing before. Then we look into the percentage of tokens that are being held by whale addresses. So essentially, just to give a perspective of how exposed you are to whales, right? How concentrated.
And in Bitcoin, that's quite small, right? 11%?
It is quite small, and I'll say why. Mainly because our definition of whales is, and super whales, is any address that has more than 0.1% of the circulating supply. So for assets with huge market cap like Bitcoin, to have more than 0.1% is huge. So if you want to look into this analysis, you just have to click in there, and you'll see the analysis itself. So unfortunately, for whales, there's only one address that meets that definition right now. The good thing is that we're expanding this analysis into more categories. So essentially, spreading it down a lot more so that you can see more, more detailed view of the ownership of Bitcoin. But if you go to any other asset, you'll be able to see it more clearly. So essentially, according to our definition, Bitcoin is quite distributed amongst retail investors. Something like 89% of Bitcoin is being distributed amongst retail investors.
That's really good to see, because so many people assume that Bitcoin is dominated by these kind of enormous investors. So it's really encouraging to see that, actually.
Yeah, it's one of the most decentralized assets. It's super popular, and of course, it's the main asset that moves the market. So yeah, it's a lot of people will have Bitcoin, and it's not as concentrated as other assets. So I'm a huge fan of, I don't know, Matic or Polygon. So if you look into this metric for Matic, you'll see that it's quite different. So now you're looking into 90% of concentration, and if you go into it, you'll be able to see that there's 12 addresses that hold roughly 80% of the market. We're not saying this is a bad thing or a good thing, but if you're going to invest
It
in an
does mean you're
asset,
vulnerable, right? If you're a small
Yeah.
investor, you're vulnerable to what these large investors are going to do.
you should know, if you get together, if these investors or addresses get together and decide to sell, then you could be really exposed. I'll have to make a disclaimer here. So some of these addresses will be smart contracts, right, that are controlling the supply of assets. We're expanding the analysis so that it's better. But essentially, Matic is one of these assets that have, it has a strong concentration in very few addresses. But many crypto assets follow the same structure. Another thing that we show you, I mentioned before, correlation with Bitcoin. People want to know if an asset moves with Bitcoin or against Bitcoin, maybe. So part of a good investment strategy is to be, it's to hedge against, what Bitcoin might do. So this is a metric that allows you to do that. All of these boxes are clickable. So when I click, it takes you to the bigger visualization. We also look into for how long investors are holding these assets. And for example, Bitcoin is a good example of the store of value. So on Matic, because it's quite a newish blockchain, most addresses are holding these assets for more than a month and less than a year. And about 28% of addresses are moving these assets constantly at the on-chain level. But if we switch to Bitcoin again, just to compare, you can see that the picture is quite different. Now you're looking into 59% of addresses are holding Bitcoins for more than a year. So Bitcoins don't move that often. It means people are just holding them.
So if you're looking for an asset to hold, then you'd be looking at that kind of metric.
Correct. There's other interesting things. We wanted to look into the adoption of institutions coming into the crypto space. So we set a threshold, and we said, okay, let's just look into transactions that are large transactions. So essentially, we're trying to get rid of the noise of very small transactions. So we're only looking into transactions that are greater than $100,000 in value, and it's a good proxy for institutional transactions. So by looking at this indicator, you can also infer and find patterns of behavior. So when you look at the data, you can see that large transactions increase and price does the same. And when large transactions drop, as you can see here in this moment in time, the price follows as well. So there's strong correlation between these two metrics, and that's why we use it as one of our signals as well.
Okay, interesting. So as a beginner to your platform, I'm sure you're not allowed to make recommendations, but what would you say to a beginner that comes onto your platform, how they would even begin to use it with all of these tools that you have available?
Well, I definitely recommend, first, we do monthly webinars, and that includes using our metrics to, uncover very interesting insights. So I definitely recommend join one of our webinars, and, come into the blog, play around with the tool. There's a 7-day free trial. We have a full resources page in which you can read how to use every single indicator and how to interpret it. There's more material in our Medium blog. We write constantly, sometimes 3 or 4 articles per week, and most of these articles are on research, or they're looking into a specific asset with something that happened on the market, but always from the analytics perspective, because there's a lot to see, and there's so much. The analysis can go to such depth that not many people know that there's these tools available for them.
And why would somebody typically come to you? Like your average user profile, who are they? Why are they coming to you?
Most of them are individual investors that are looking into, have better research, better information, so they can make better investment decisions. As I showed you before with some of these metrics, some assets will have qualities that align with their investment theses or strategies. So, I was just saying that it's people come to us because it's not costly. Like to pay for Into the Block, it's only $10 a month, so it's quite affordable to many people. So definitely, good. It's a very good tool. People can go very deep into the analysis, and they can just make better investment decisions. That's what I would say.
And on that note, as we promised everybody in all of our social media promotion, we do have some very special rewards for Yield app users. Nick, would you like to announce it, or shall I?
Yeah, we can announce it together, I think.
Yeah, sure. So we are giving special discounts to Yield app users. We will be giving a total of 50%, I believe, discount on the monthly subscription fee for tier 5, 40% for tier 4, 30% for tier 3, 20% for tier 2, and then 10% discount on the monthly subscription fee for tier 1 Yield app users. We will be following up this video with an email to give details of that. Nick, did you want to add anything detail-wise that I might have missed?
No, I think you cover everything. I would encourage people to come to Into the Block and play around with the tool. It's there, so you guys can use it. And I was actually looking into a couple of. We also covered the yield token in our platform, since you guys have an ERC20 token. And I uncovered really interesting things about your token. Like, you guys are having a very strong growth in terms of active addresses. In the last couple of weeks, you guys are up 40% in new active addresses. Which is really, really good. So unfortunately, I don't think we have time to show that, but I did take.
You know what? Let's squeeze it in. Go on. Let's squeeze it in. Share your screen with me, and you can show us.
Okay, let's go for it.
Why
actually
not?
have.
Nicholas Contasti joined.
There we go. There's always time for a bit of YLD analysis.
Yeah, so I just made a very small presentation. I didn't have time to show this, but what I was going to say that there's very strong support. Oh, sorry, this shouldn't be here, but anyway, there's very strong support for the yield token, as you can see. So it seems like there's not much resistance coming forward, going forward in the price action. So you guys should expect the price to hold and to go up. That's one thing we noticed. Another thing was that you guys have very strong activity on the Western side of the world, which is, it's neither good or bad. It's just one thing that we noticed. Some of the days you guys have pretty strong activity on the Western time zones. This is what I meant about healthy growth in terms of active addresses. On the last 7 days, you guys have a 43% increase, which I think it's super bullish. So yeah, seems like you guys are doing really well. And then I mentioned the correlation factor, right? So some investors want to have their assets distributed amongst, assets that go with Bitcoin or against Bitcoin. But you guys have low correlation to Bitcoin, which is, I think it's good. So it's a good hedge holding YLD tokens.
Yeah, absolutely. It's always good to have a hedge. Oh, well, thank you so much for sharing that with us, Nick.
No problem.
Perfect. Thank you so much for your time. This has been another episode of Fridays with Yield App, a very special show with Into the Block. Please do follow us on our social media. Nick, where can people find Into the Block, please?
They can just go to intotheblock.com on Google or any search engine. We also have our Twitter, which we're very active. So let us know any questions you might have. We also have a chat box on our website. And if you guys talk through that chat box, I don't know, I might be there and answer your questions as well.
Personal service. And if you are a Yield App user, you will be receiving an email with your discount codes to access intotheblock.com. So please do keep an eye on your email. We will see you next time. I believe we have another episode of Fridays with Yield App next week with Steady State. So please do stay tuned for details of that. In the meantime, go over to intotheblock.com, give it a go, especially when we send you those discount codes. Thank you again, Nick, for your time. It's been a pleasure. It's really interesting. I might go and give it a bit of a whiz myself.
Yeah, thank you, Rebecca. Pleasure being here.
All right. Thanks, everyone, for joining. Take care and see you next time.
Bye.